Van Onselen, Chief Economist at the NB Fund and NB Super from macrobusiness.com.au. He joins us every week for the Treasury of Common Sense. G'day, Leith.
G'day, Luke. How are you?
Very well, mate. Lovely to talk to you again. Let's get into it. We've got a war of words, another between government and the RBA. I'm assuming this is about the RBA's reluctance to move and the Albanese government needing a boost.
That's right, mate. Look, it's sort of starting now, but I think it's going to really ramp up heading into the next election. Now, we all know that the federal election's due before 20th of May next year. So, it's coming up. And at the moment, all the polls are saying that we're sort of heading towards a hung parliament. So it's going to be a very, very close election. And obviously, the cost of living is one of the major concerns of Australian voters. We've just had the largest decline in disposable incomes on record over the last couple of years. We're obviously getting hammered by the high inflation and all the other stuff that's going on. And at the same time, other Anglo countries like New Zealand, Canada, the United States, the United Kingdom, they've all begun cutting interest rates, whereas Australia hasn't, obviously. And so I think it's an understatement to say that the Albanese government is desperately relying on the Reserve Bank to cut interest rates before the election, because if it doesn't, it could lose government effectively, or have a very form a minority government at best. Now, on Wednesday, we obviously got the September quarter Consumer Price Index, the CPI data, which is sort of the key data release that the Reserve Bank's looking for. Now, it was a bit mixed. So on the one hand, the headline inflation result, and this is the one that Treasurer Jim Chalmers is crowing about, came in the lowest in 4 years, and it's now tracking within the RBA's target of 2 to 3%. So the headline inflation rose by only 0.2% over the quarter. It was only up by 2.8% year on year. So that's within the RBA's target of 2 to 3%. Now, Treasurer Jim Chalmers was saying, look, we've got inflation back, etc. Basically starting to put pressure on the Reserve Bank to cut rates. Now, the problem with it is, though, this decline in headline inflation has been caused by government subsidies. So the government's handed out a whole bunch of subsidies for electricity, rents, etc.
Yep.
And that's actually pulled down this result. And the Reserve Bank has said repeatedly that it's going to ignore those subsidies. It's going to focus on what's called underlying or trimmed mean inflation, or some economists call it core inflation. And that's basically the headline inflation once you strip out these sort of volatile items. And Reserve Bank Governor and the sitting governor, Andrew Hauser, have said that that's the focus they're going to look at. And the problem with this data, Luke, is that the trimmed mean inflation, which is that underlying inflation, was 0.8% in the September quarter and 3.5% year on year. And that's above the RBA's target in both quarterly and annual terms. And what it means is that the Reserve Bank's very likely to keep interest rates on hold until next year. And so on the one hand, you've got the federal government's, talking up the headline result. The Reserve Bank's likely to look at the underlying result, which is still too high. And as a result, we're likely to see a war of words. Now, the reason why it's likely to get interesting is that the Reserve Bank Act, which governs the 2 to 3% inflation target, doesn't mention this underlying or trimmed mean inflation. It only mentions headline inflation. So I wouldn't be surprised at all if Treasurer Jim Chalmers starts putting pressure on them, saying, look, we've got inflation back within target, even if it's through this, duking the stats through subsidies.
Yeah.
Because that's what the Reserve Bank Charter says. But at the same time, the Reserve Bank's, focusing on this underlying inflation. So it's going to be very interesting times ahead.
It's the whole question about what happens to the government's political fortunes and it hanging or falling on one interest rate cut. And look, I've made this point for a while. I don't want to be repetitive for my listeners, but if your mortgage repayments are up by $1,000 or $2,000 or whatever a month after tax dollars, and a month out from an election, old mate gives you $200 back, is that going to undo all the pain you've been through for years? I don't think so.
Yeah, although generally when you get rate cuts, you get them in bunches. So if it's just one rate cut, that's true. But if it means that we've sort of got the end of this monetary tightening cycle and we're going to see a series of rate cuts, I think people will feel a lot more exuberant about that, and there'll be a big sigh of relief. And we saw that over in New Zealand. As soon as New Zealand cut their official cash rate by 0.25% in August, then they followed up with another one, and they're about to follow up with another one again. So they've already cut by 0.75, and another 0.5% is likely to come soon. Consumer confidence bounced, government confidence bounced, and the incumbent government actually went up in the polls. Now, this was a new government, not a older government. They'd already just been re-elected. A new government had been elected. But either way, pretty much all the metrics that a government would look at all bounced in New Zealand. And I think, if the Reserve Bank does cut, and the Albanese government would have been hoping they'd cut before the end of the year and then do another one or two before the election.
Yeah.
We're clearly not going to get that now. And as a result, it's going to obviously heap on the pressure on them.
Yeah, yeah. Now, also the ABS releasing retail sales data for Q3. Good or bad?
Oh, look, they were pretty poor again. It's another shocker. So basically, in volumes terms, this gets rid of this is just the actual volume of retail sales. They rose by 0.46% over the quarter and 1.7% year on year. Now, obviously that's growth, right? So everyone's going, oh, hang on, what are you on about? That's growth. But this is in the context of Australia's rapidly growing population, which is still growing very rapidly. And the fact of the matter is, once you strip out population growth, retail sales volumes per capita have declined for 11 consecutive quarters. So that's a hell of a long time. And in annual growth terms, retail sales have fallen for 8 consecutive quarters. Now, both those are records. We've never had such a decline in per capita retail sales. And it's much like Australia's per capita GDP decline, which is also running for a record period of time of 8 consecutive quarters. So, look, not great results. Population growth keeping sales ticking over very slowly. Now, the bigger impact here is on discretionary bricks and mortar retailers. Like those are the ones, your corner stores, that sort of thing. Yeah. They're getting absolutely smashed. So at the same time, we've got a pretty poor economic conditions outside of population growth. They're also getting hammered by increasing, competition from online retailers. So, Australians got accustomed to buying things online over the pandemic, and they've just, taken to it like ducks to water. And Amazon has now become the nation's 5th biggest retailer.
Jeez.
According to Roy Morgan, estimates that were released a month or so ago, Amazon's customer base increased by 16% last financial year.
Jeez.
With 1.1 million more customers than it had in the previous year. Now that's obviously big growth given the macroeconomic climate we've got and poor retail sales growth overall. And the other thing is that there's some new players in the market. They're 2 Chinese behemoths called Temu and Shein.
Oh yeah.
And they're interesting because they actually sell directly from the factory to you at home, and it gets delivered much like Amazon. And they're growing really rapidly as well. So Roy Morgan estimated that there was nearly 6 million Australians used the platform last financial year, with 80% of them being repeat shoppers. And Roy Morgan's predicted that this Christmas, Temu and Shein are going to get a much bigger slice of the not very quickly growing pie, because Australians are basically, we're bargain hunting at the moment because we've got the cost of living crisis. So they're going to go to the cheapest option, and Temu and Shein are incredibly cheap. So it's a pretty poor situation, especially overall retail sales are poor. They're being held up by population growth. Obviously Australians per head are cutting back on retail sales. So it's a poor environment. But at the same time, it's particularly poor if you're a traditional retailer, because you're losing market share rapidly to these online juggernauts like Amazon, Temu and Shein, which is why we've seen so many retailers go broke over recent years and go out of business. Yeah. And there's, I can't see the situation changing for them, because the macroeconomic environment will improve somewhat in next year or so. Once the RBA starts cutting rates, we'll have more disposable income. But at the same time, immigration is likely to fall from these absurd levels. It's still going to be high. So as a result, you're going to have a bit of give and take. You're going to have slightly more spending per person, but you're going to have less people doing that. The growth in people doing that spending is going to be less. And at the same time, I can't see this online competition easing. It's just going to get worse and worse for them, which means that we're basically going to have more and more retailers shut down. Their margins are going to get compressed. And we've already seen in other places like the UK, et cetera, a lot of the retail shopping strips have become basically boarded up and have gone out of business because of this growing online competition. So it's not a great situation to be if you're just a traditional retailer in Australia. You've got poor macroeconomic conditions as well as this online competition that's just voracious since the pandemic.
Yeah, amazing. Thank you, mate. Talk to you in a week's time.
Yeah, thanks, Luke. Speak to you next time.
Good on you. Leith Van Onselen, macrobusiness.com.au. And one of my listeners, Peter, makes a point. Don't forget, water bills are going up due to increased demand through immigration. I saw that report through the week, Peter. Thank you for getting in touch.
This podcast